Greetings, everyone. This is Caroline Staten with Transition US. We have Marc Armstrong with us today. And Marc is a professional, business development professional with extensive experience in the software industry. He has an MBA from UCLA in Information Systems and Organizational Behavior. He's done professional work with sales and business development, including IBM Finance and SAP Technical Development Partners. And his most recent work is starting nationwide educational nonprofit supporting banking reform, which has resulted in over 17 bills in statehouses nationwide in the last 24 months. The opportunity that we have today is to have a discussion with Marc. It's Peak Money, Peak Wealth, a discussion of debt and community. So without further ado, over to you, Marc, and thank you for joining us today. And we know that you need to get off the call promptly just before 12 for your interview. So thank you for joining us, and over to you.
Okay, thanks, Caroline. And Susan Harmon can pick it up where I leave off when I get this other call. But thanks, everyone. I'm glad to be on this conference call. And I thought I would spend just 10 to 15 minutes going through a quick discussion on what the core problem the establishment of a public bank solves. Keep in mind that a public bank is not the end in itself. It's the means to an end. We freely admit that. Even though we're called the Public Banking Institute, we recognize that the purpose of public banks is not to create more debt. It's not to just be focused on finance. It's actually focused on financing the new economy and financing businesses that replace the carbon-based economy that we're existing in. And it doesn't do any good, as Susan was just telling me the other day, it doesn't do any good to necessarily reduce emissions when you don't have a choice. You don't have an alternative to your car. So if you don't have an alternative to the car, to a fossil fuel burning car, to one that's uses energy that's generated from solar panels on the roof, if you don't have that choice, you're not going to be able to reduce your carbon footprint. And so that's what public banking is all about. It's funding the businesses that produce the goods and services that are in the new economy. And many of us define that as a sustainable type world. And so that's kind of the big picture. More specifically, what we solve are really two problems. The first has to do with the way things exist currently. So we all just went through tax season, and we paid our taxes, and we all have a county treasurer or a state treasurer. What happens to the money that we write in our checks is transferred out of our accounts into the California Treasurer Office or whatever state treasurer you're with? Well, with the exception of North Dakota, the vast majority of that money is put into Wall Street banks. And you may think on the face of it, well, that's okay because they pay us a little bit for those deposits that we make. They collateralize those deposits. They lower the risk supposedly with putting that money into those banks. But we need to understand what they do with it because it's really critical to have this understanding. Otherwise, public banking will make no sense whatsoever to anyone. What these Wall Street banks do is for every $100 of deposits, they are legally licensed to create $100 of bank credit. It's simply the double entry accounting system. The money that you put into a bank, that $100, is still there. And because that is a liability to the bank, they owe that money to you, then they can, on the other side of their balance sheet, create an asset of $100. And it is that $100 that is lent out. Many of us will say that banks lend out their deposits. That is not true. Banks lend out bank credit that is generated by the deposits. If they truly lent out their deposits, it would look like a piggy bank where money goes in and the money is taken out and given to the person who's borrowing it, and there's nothing left for the depositor. So clearly, it's not true that banks lend out their deposits. They actually lend out their bank credit, which is generated by deposits, and that's how they make their loans. Now it's like, okay, so why are you telling me this? The reason why this is important is because the hundreds and hundreds of billions of dollars that our tax revenues are that reflect our tax revenues over the course of a year, that are put by our state controllers and state treasurers into Wall Street banks. That bank credit that's of equivalent value is used to buy stock in Chinese manufacturers. It's used to buy bonds in Brazil. It's used to fund carbon-based carbon fuel plant, coal-fired plant in Chile. That's what Bank of America does with it. And so that credit is for their use, for them to make money off of for their shareholders. And all we would have to do is take that money, the money that's on deposit in those banks, put it into our public bank, and use the credit that's generated for ourselves. So a good example is the Bay Bridge here in California. You know, that Bay Bridge cost $6 billion to retrofit. That's in services and in materials. And because we borrowed that money, we're paying interest and fees on that, which add up to another $6 billion. Well, if we had a public bank of California, we could have borrowed the bank credit, you know, that's generated from our deposits, our state tax deposits. We could have borrowed that bank credit and funded the entire Bay Bridge ourselves. And whatever interest we paid for that loan from our bank would have been paid back to ourselves. So it comes down to, would you rather pay interest to Wall Street banks or pay interest to ourselves, which basically is a net zero type effect. So that's the first problem that's being solved. It's saving money. It's a logical approach to just taking money away from being on deposit with these Wall Street banks, putting it in our own public bank, and using the bank credit that's generated from that to create loans to fund schools, to fund the rebuilding of bridges, to fund the new economy type businesses. There are lots of things that money can be funded. Here in the state of California, on at least a couple of years ago, the average daily balance was about $17 billion. We could have had $17 billion of credit, which we could have used to do all of this. And so there's money. This does not cost us one red cent. This is money that is available to us because of the special license that banks have. And keep in mind, it's simply a license that the state gives to these banks, or the federal government gives to these banks. It's very much like a liquor license. You know, a liquor license to a bar is really important because it gives them the authority and the protection they need in order to serve drinks. A banking license gives banks the authority to serve credit, to serve bank credit. And the way it's generated is through deposits, but they do not lend out their deposits. Let's be really clear about that, because if they did, it would not be an accurate reflection of actually what's going on within a bank operations. So that's the first benefit and problem that's being solved. We can save a lot of money. The second is actually kind of more important as time goes on. It has everything to do with risk. What most of us think is that when we make a deposit into a bank, we still own that money, and that's our asset, and it's just on temporary hold by the bank. The reality is that legally, we are actually making a loan to that bank, and it becomes their property. And we can get some sort of assurance from the government by having, for instance, in this country, the FDIC provide an insurance policy to us so that we've got some guarantees that anything less than $250,000 will be given back to us in case there's a bank failure. But as we saw what happened in Cyprus last month, is that basically it was a complete legalized theft of people who were not covered by insurance, or people who had money in the bank which surpassed $100,000 in Cyprus. Here it would have been $250,000. But what it basically meant is that those people who had those large sums of money for their businesses or payroll or for pension plans, whatever it may be, and yes, there was some money from the Russian mafia, but certainly not all of it. But the point is that those people had the belief that the money that they had on deposit was actually theirs. No, it was a legal step that the banks took to actually seize 40% of those deposits that were over $100,000, to seize it and to convert it into capital for the bank. And then the depositors essentially became partial owners of those banks. And this was completely sanctioned by the European financial institutions and the other organized entities within Europe. The same sort of mechanism can happen here in the United States. And so what we're concerned about is that those hundreds and hundreds of billions of dollars that are our tax revenues that are put on deposit in these large private banks can actually be seized by these large private banks in order to recapitalize themselves. We all know that TARP is not going to happen again. Taxpayers are not going to bail out the banks. But the banks have a legal mechanism now to actually seize their depositors' money and use it to pay off the derivative holders. And I don't want to get into derivatives too much, but there are trillions of dollars at risk that are on bank balance sheets on the depositor side because of derivatives. What's important for us to know is that because of the 2005 Bankruptcy Act and because of Dodd-Frank, derivative holders have super priority. They stand first in line when the deposits need to be tallied out if there's a bankruptcy with the bank. So you end up with a situation where even if we're not, we're all creditors, but it's the derivative holders who are first in line in case there's a problem. And there's, to compound things, the people who have smaller amounts of money, under $250,000 in deposit with these banks, they think they're going to be covered by the FDIC. The FDIC only has about $26 billion set aside, and yet the total exposure for derivatives in these banks is more like $12 trillion. So, $26 billion just pales in comparison to the scope of what could be a major problem. So the bottom line for us is public banks are a way to put the public's money into a safe and secure financial institution which is transparent and which is accountable and which is not taking all these bets with derivatives. And because of that, it would not be affected by any potential issue, and certainly would not have the situation that we saw in Cyprus, where basically legalized theft of depositors' money occurred. It does not matter if the money is collateralized or not. The money can be seized and given to the bank in that case. And so, we need to, we're raising the alarm on this because it certainly is a big issue, but between saving a pile of money and then lowering the risk associated with the existing status quo, we think these are two good reasons for counties and states to create public banks, create all this bank credit, because there's a lot of money that can be put into these banks just from government institutions. And oh, by the way, Wall Street banks are not happy about this because that's money that is going out of their banks that's currently on deposit with them. It would go into these public institutions and used for the benefit of the people. That's the core value proposition behind public banking. And this is done throughout the world, in South America, in Asia, in Europe. Germany has a very strong network of public banks that they use to fund all the solar installations within their country. Germany, as you know, 2 years ago after Fukushima, committed as a public policy to get off nuclear energy. Well, the reason why they can deliver on that, and they want to do it within 10 years, so by 2022 I think it is. The reason why they can do that is because they are specifically funding solar installations with their network of public banks. Now, we can't do that in this country. We may have a public policy, but because we don't control the bank credit that's available to people, to businesses, we're always going to be beholden to Wall Street banks to ask their permission if new money can be created for, XYZ type project. And that's the big issue with the sustainability world, is because there are no banks lined up, very few banks lined up behind it. It's very hard to get funding for cooperatives. It's very hard to get funding for solar installations, etc. And compare this to North Dakota, where we do have a public bank in this country, and they are making loans as low as 1% per year to businesses that they choose as being really important. They just create low interest loans for those businesses. So we can do the same thing here in Sonoma County, in the state of California, and there's just a lot of interest in taking this approach. So with that, I think I'll end. And Caroline, you can throw it open to questions if you'd like.
Thanks, Mark, very much. And for those of you that haven't been on Maestro teleseminar before, what you can do is, with your comments or questions, is press 1 on your keypad, and I'll call on you. And I know, Carl, you had a question that you emailed me, and I was hoping that you could bring that up for Mark as well. We'll start with Karen. Go ahead.
Hi, Mark. Thank you so much. My question is just regarding the role of credit unions, and if you could just clarify for me the difference between, the niche that they play, and are they a little closer to this model than the people? Yeah, I guess I'm just wondering about credit unions.
Okay, so the nature of depository banks is that they are corporate entities that issue stock. And so the stockholders receive the dividends and can buy, the shares are traded on an open market. The nature of a credit union is that the members, the people who put deposits into the credit union, are the owners. So you end up with a very different type model. And unfortunately, credit unions, even though there's a lot of merit because they're community-based and they have a way to basically provide loans. They're typically consumer-type loans, but they're restricted from doing much at all in the commercial area because of the legal restrictions that are put in place by the banking lobby. The Wall Street banks do not want to compete with credit unions, so you will not see many credit unions offering commercial loans, like operating loans for 45 days or whatever. And so they're restricted from providing many of those products. And just keep in mind, credit unions are legitimate competition for private banks, but they're restricted because of law. It's not an open market that we have in this country. And the restrictions go all the way to Walmart. Walmart's been trying to get a banking license for 10 years, and they've never been able to succeed in getting a banking license because the Wall Street banks do not want Walmart to do to them, which Walmart has done to Main Street businesses. So the Wall Street bankers are really powerful in terms of restricting competition, and the latest appearance of all this is in the Trans-Pacific Partnership Agreement, TPP, which is probably going to be fast-tracked by President Obama this fall. And there's going to be restrictions against credit unions as well as restrictions against public banks in this new round of trade agreements, because financial services will be included. Up till now, financial services never have been included. We have to just keep in mind that the Wall Street banks are the largest of all corporations in terms of power, and they've got this very distinct privilege in terms of being able to lend out bank credit. It is not a right, but it's a privilege that we, the people, have given them. and because of the power they've accumulated, they are influencing laws to further their own purposes. And so it's a real problem. Four credit unions have borne the brunt of it, but public banks are going to be restricted heavily in the future because of the TPP agreement.
Thank you very much on that one. Next is Eric Curran. Go ahead, Eric.
Thanks a lot, Caroline, and thanks, Mark. It's very interesting. Mark, I'm a city councilman in a city of 24,000 in the state of Virginia, and I like your idea. I'm pretty sure that the folks in my state capital probably wouldn't like it, and of course we're a Dillon rule state, which means that local governments can only do what the General Assembly gives us permission to do. So right. I'm wondering if we have a snowball's chance in a very hot place of ever getting something like what you're talking about implemented, even if we could do it on a city or a county level.
Well, it's a good question. Eric, what part of what town in Virginia are you from?
It's a place called Stanton.
Oh, I know Stanton.
It's located, you know Stanton? Okay, it's located in the Shenandoah Valley.
Yeah, great. I was just in Stanton 3 weeks ago visiting a good friend of mine. Yeah, I love Stanton.
Thanks.
Yeah, and I want to get to Stanton to go to Marinos, which is just the best bluegrass place I've heard. I haven't been there to enjoy it yet, but I will get there soon. So Stanton is really interesting because of the it's very similar to Sonoma County. You've got a pretty dense urban area, and you also have a lot of agricultural surrounding it. You don't have very much, and it's not a suburb per se. It's not an exurb. It kind of stands alone, and it's the county seat for Augusta County. And so it actually is kind of an interesting demographic because of the rural nature. The reason why having a strong rural element to a economy is important is because it's very important to have supply chains that are funded by a public bank from the very source to the end. So things can be produced as well as consumed in the same county. And that's important because the money then circulates within that economy. Okay, it doesn't leak out. Unfortunately, Stanton has a Walmart, and just think of all the money that leaves Stanton because of the production of goods over in China, which are sold there in Walmart, and then people buy them, and the money leaves the economy. So the trick is to have people understand how important a source of financing of local businesses is to a small region like that, and to get the business community to support something like that. It's going to be a long project, but once you get the business community behind it, then you end up being able to make a better case to the folks in Richmond and elsewhere. The way to fast track it is to actually focus in on debt servicing costs. Now, I don't know what the debt servicing costs are for Stanton. I don't know if you want to tell me, but the thing is, a lot of the debt servicing costs can disappear if you start financing the same projects with a public bank. And so instead of trying to make the case that we need the extra credit in order to fund new businesses, you step back and you say, well, let's use the credit from a public bank to fund the projects, whether it's building of schools or hospitals, whatever, that we have to issue bonds for. And if we can avoid issuing bonds, then we end up basically going into debt further, and the only debt we go into is with our public bank, and the interest that's paid on that public bank is actually returned to the general fund for the county. So you end up with this keeping the money local. Again, it's the same concept. But that's how you make the case for a public bank in a rural area. But again, it depends on how big the debt servicing costs are.
Eric, did you want to respond about the debt servicing costs quickly?
I wish I knew. We're going through our budget now. It's a huge book. I'll have to look into it or ask our city manager. But I agree that would be a compelling. I'm sure that it's millions of dollars, and I'm sure that would be compelling for my colleagues on City Council.
Well,
Yeah.
I think, Mark, you're available for further conversations like this, so I could put you two in touch.
Yeah, that'd be great. Please do that.
Yeah, thank you, Caroline.
Yes, you're welcome. And Carl, go ahead, please.
Hi, Mark. This is Carl in Portland, Oregon. I've created a local currency here, which is a clone of the successful Berkshires in Massachusetts. And for the past 2 years, we created a project. We printed the currency. We created iPhone apps for tracking it. We have websites, brochures, flyers. There's a lot of merchants on board. And the problem we're having is it's a nonprofit organization. Hello?
Yep, we're still hearing you.
Oh, okay, great. And we're having trouble getting community leaders or anyone in the city to become involved with the project. And I paid for everything up front, so it's not a financial burden, but eventually, a year from now or 2 years from now, we're going to want to receive some additional outside funding from grants or from sponsors and such. And we're just having a hard time getting the ball rolling here in Portland, and it's kind of conflicting for us. I wonder if you had any good suggestions.
Okay, so I've got a few comments to make and a suggestion. So what's interesting about local currency, as well as any sort of business-to-business mutual credit system, as well as public banks, is that they're all counter-cyclical, meaning when credit is tightened and there's less money circulating in the economy because people are saving more, less money is issued as loans, etc. And by the way, 97% of our money supply comes from loans. So when credit is tightened, a counter-cyclical approach would be to use local currency, would be to use mutual credit, which doesn't involve a currency at all. You're just keeping score, or to use a public bank. And there are lots of studies that have come out identifying public banks as being definitely counter-cyclical and being able to really slow down the steepness of the curve, or lower the steepness of the curve, and make it not as deep, a recession not as deep. But the problem with local currency is that it's a matter of trust. I mean, people need to know that the currency that they're holding is authentic, and then also know that it can be spent somewhere and it will be accepted. And so I've designed a few local currency systems, and I think the trick is to put the rules of the system in the hands of the businesses, so that the businesses are actually it's up to them to determine how much and when of that currency they accept. So for instance, a restaurant on a Tuesday, Wednesday, or Thursday may be much more willing to be paid in local currency on those nights, and then actually restrict usage of that currency or acceptance of that currency on weekends when out-of-towners are in or whatever. And they can actually give it out as change on the weekend. And so that's up to them. Those rules of the system are up to them. And it's important to put those rules in the hands of the participating businesses. In order to raise money from it and to make it more of a much more interesting for people to participate in, you can actually come out with gift sets. I know Salt Spring Island they've come out with some gift sets, and it makes it much more attractive, and it kind of funds itself by doing it that way. So I don't know if those are ideas that you've tried or not, but it seems to have helped certain businesses, and the notion of putting the rules of the system in the hands of the participating businesses, that's just my observation. It gets away from the issue that a lot of businesses have because they don't want somebody else determining what their discount policy is.
Sure. All right. Well, thank you very much.
Yeah, thanks.
Yeah, thank you, Mark. Are there any other questions or comments? And press 1 on your keypad if you do. And I know, Susan, we're going to be calling on you shortly. Let me check in with you if you have something that you wanted to bring up now as well. So, Susan, go ahead.
Well, I just was, when Mark was talking about the debt service in Stanton. We've we've sort of decided that one of the things that we can say to government officials and legislators is to ask them the question about whether they would rather be paying interest to Wall Street or themselves. Because if you have a public bank, the interest comes back to you instead of being sent off to New York.
Great. Good information there. Let's go to Karen Olson, and then we have a few more hands up. Go ahead, Karen.
Hi, this is Karen calling from Minnesota. And our transition group here is working on various kinds of ways to have our community have mechanisms to be a small business incubator for particularly supplier, provider local businesses. We've got lots of local business owners that sell goods that are produced, far, far from here. And there's a lot of people that would produce but need startup funds to do that. And so we're working on ways, there's a lot of crowdfunding ideas out there that are great. We're trying to develop. One question I have for you guys, this is an idea that we have been working on, is building a relationship with a local broker. And we proposed something called a peak oil portfolio, and with the idea of creating local mutual funds. This idea of a lot of us are trying to get our money out of gas and oil investments, and what would we do with that money instead? And we'd like to be able to invest that money locally. We hadn't heard of this concept of, a local bank, and that sounds to me like it might be just a lot harder to get up and running, take more time, more bureaucracy type thing. I just wonder what your thoughts are on this possibility of using more of the mutual fund model to source local projects.
To comment on this. So here's the problem you're trying to address, and it's telling. The problem is that the market for investments are always routed through Wall Street. There's no local investment. You cannot invest in Vermont. You cannot invest in a county in Minnesota. You cannot invest in Augusta County in Virginia. There's no vehicle. There's no investment vehicle that allows for that. And that's purposeful. The reason why is because the investment market is created by laws, by national policy, and those laws are shaped by Wall Street. And what they want is investment money to flow to their businesses, to their guys, the stocks that they handle. The last open U.S. stock market was closed 30 years ago in Spokane, Washington, and so many of these regional trade stock trading companies have disappeared because it's all been consolidated into New York. Now, the alternative is to make a loan to an individual business in a particular region, and there's a lot of risk with that, and people are risk adverse, or they buy, have a equity agreement with the owner of that business, and that's very kind of dangerous. Or you can actually invest in a bank that's making loans to businesses in a particular area, but still that's pretty risky. It's far better to actually have a public bank that represents a geographic area. So let's just say Sonoma County. Sonoma County has about 600,000 people in it, and I'm sorry, 500,000 people, and it's a $20 billion economy. And a public bank could actually be making billions of dollars of debt capital available to high-tech businesses, light manufacturing, tourist-type businesses, a real diverse portfolio within Sonoma County. And many people will say, well, how do I get in on that? How do I invest in something like that? And the way to do it is to have that public institution. Now, it's publicly owned. It's owned by the government. But as a corporation, it can issue bonds, similar to the mutual funds you're talking about. So a public bank can issue corporate bonds that people can buy into, and get a nice return on investment, knowing that their money is being used to fund businesses in that particular geographic area. Now, Wall Street hates this. I mean, because none of the money is going through Wall Street. Any of the investment desks on Wall Street, it's all being handled locally. It's a way to enable the local investment market, and public banks are really the keystone for this. And you can actually start creating mutual funds around this, because you've got a legitimacy to the market then, which is created because of the public bank is investing in this geographic area, and a mutual fund is another way to actually trade equity in a portfolio of different companies that are located in that geographic area. The public bank is not going to be doing equity with these businesses. They're just going to be focused on providing debt capital or loans to those businesses. But there are different ways to do it. But the key is it's a local investment market. It has not been defined yet because Wall Street's bias is to have it be a national or transnational investment market, and to have all those companies be traded, their equity be traded on Wall Street. So we need to break free of that, and public banks are a way to do that.
Wow, thank you. Thank you, Mark. Let's go to Chris Allman first, and then if you want another question, Karen, why don't you press 1 on your keypad. Chris, go ahead.
Hi, I'm also calling from Portland, Oregon, and I want to expound a little bit on Carl's question and in thinking in terms of Eric's question as well. As I see what's happening in Portland, where we're running into austerity budgets and layoff of lots of public employees, I think about the needs for a variety of things, including those very services that are hard to translate into businesses, a business model. For example, I'm a physician by education. I'm a physician activist, and I think about whether it's elder care, or child care, going into preschool, those kind of services that are typically so low paying, or you've got the individuals who can't afford them because they're too poor. Do you have models that are out there that show this effectively working with currencies that, or time banks or whatever that could be a good place to look at to get this in place?
Well, I'm sorry, I don't. I know there's a time bank in lots of different cities, including Stanton, Virginia. But the these different time banks or local currency models, it's another way to have a countercyclical effect. But I really haven't paid much attention to that world. I'm sorry, I just focus on public banking. So I apologize. But they're very complementary. It's very difficult to establish public banks, and that's why I'm focused on that, along with Susan, who'll be talking in a few minutes. But you could have a local currency system be part, essentially, of a public bank. Keep in mind, when you use a Citibank credit card, for instance, and get points, you're not only using U.S. dollars, but you're also using a local currency. Frequent flyer miles or whatever, that's another type of currency. So they're very synergistic and complementary. But I'm sorry, I don't have much information on the local currency world. Sorry.
Okay. Thank you.
Yeah.
Yeah, thank you, Mark. I know you've been really busy with the public banking realm.
Yeah.
Have your hands very full with that. I want to go to Ray next, and then we'll go back to you, Karen. Go ahead, Ray. Ray, you might be on mute. I'm going to put your hand down, Ray, and if you do want to ask a question, press 1 on your keypad. And we'll go to you, Karen.
Thanks a lot. My question, I guess, is in lieu of being able to get a public bank started, which, I totally think the concept is fantastic, but I am just wondering, in our community, what you would suggest as the quickest, most effective ways for people who want to invest right now, have money, they want to get invested into the hands of local business startups. What's the best way for us to do that right now with existing models?
So Slow Money has an existing investment model, which is used to further the investment in local production, and so that's the only one I can refer to. I'm just not that familiar with it.
Great. Well, thank you, Mark. Any other comments or questions? The floor is open, and I think we have Mark for a few more minutes, maybe another question or two. And Mark, not seeing any coming up yet. I know you're going to helping to host the public banking conference that's coming up, and
sure.
You'll be presenting at that. And tell us more about that, or if there'll be collateral from that online somewhere where people might get the info.
Yeah, so we'll be videotaping everything, and we will likely webcast it. It's a 2.5-day event held in San Rafael. We've got over 30 speakers coming in to talk about public banking, including everything as diverse from postal banks. We're trying to get a national postal bank in place. There are already some financial services that our post offices do provide. They used to be a full-on bank, and we want to return to that. So we've got a speaker on that. We've got speakers on basically how government can take back the power of issuing money. We don't realize it, but governments do not issue money anymore. It's all banks who do that. And that's a very small private group of people. I think we call them the 1%, but it's more like 0.001%. And it's those folks who issue the money in our economy. And because it's such an important function, we think there should be some public oversight over that. And so we'll have speakers on that. Interestingly enough, we're having a really nice session on Sunday night, June 2nd, with Matt Taibbi, a journalist for the Rolling Stones magazine, and then also Birgitte Jonsdottir, who is the newly reelected Pirate Party member of Iceland's parliament. And she's coming over for this conference as well. So there's going to be some really exciting conversations on stage throughout the 2.5 days. Susan, you can probably tell more, but it's going to be fun. So folks on the West Coast, if you can make it down, it's June 2nd, 3rd, and 4th in San Rafael, California. And more information is at publicbanking.org. Just go to publicbanking.org, and all of the connections and speakers and schedules are there.
Thank you, Mark. And we do have a question from Anne. Anne, go ahead.
Oh, hello. Am I clear?
Yes.
Can you hear? Oh, good. Okay. I am living in a small town on the West Coast, north of Seattle, north of Vancouver. And we are trying really hard to, because we're quite isolated and dependent on ferries, so local economy, local money, trying to get Transition Town more and more active. I've only just arrived here within 2 years, and I'm really impressed with everything they're doing and learning a lot. And so part of what I'd like to ask you, Mark, is almost more of a philosophical question. The idea of how humans are at one point isolationist and at another needing to trade or get goods from outside their community. It's sort of interesting even watching whole countries have been through periods like this, right, where Japan has pulled itself in and not traded at all, and it's obviously the trading, isn't it, that's sort of a defining moment where your money goes out of your community because you want goods that you don't produce yourself. Have you ever wrestled with that question?
Yeah, I think it all has to do with building community, and at the point of a transaction, when you make an exchange, you're actually building a bond with that individual you're doing that with. I think philosophically, I think that's what we're hungering for is those kind of connections, and that's why we we do it, and there's values associated with that, whether you're doing it with people within your circle or not. Yeah, there's always this tension. I mean, it's certainly when you look at different ethnic groups, there are families. It's like keep the business in the family. You do all your business within the people, within the family, so the money stays within that community, and there's a high value for that. Interestingly enough, when talking about philosophy and maybe religion, interest, which is a way of extracting money from a community, is banned in the major religions, and so the cumulative interest is very detrimental to economic systems because it's a mathematical construct. It's human made, and it's a way to pull money out of a society, and you end up crippling it if you don't have a means to replenish that money. And so that's actually, I would emphasize that as being a far more dangerous type issue rather than trading with somebody who's from outside of your community, because interest and interest payments is a great way to undermine the entire economy, because debt servicing costs are upwards to 30-40% of the cost of what we buy. I mean, if I buy a pen for $10, $4 of that went to pay banks or investors interest up and down the supply chain, and so that's a very dangerous construct, which is actually more of an issue than doing trade with somebody from outside your community, I think.
Yeah, and it makes me think of even Shakespeare, the Merchant of Venice and Shylock and the pound of flesh and the interest that they, charged, and the betting that they did. The ship will go down, and then he'll get the daughter and the pound of flesh, and oh my goodness. So could a community actually sit down and say, something about the boundaries? These are the things we can make, these are the things we can't make and that we need to import, and this is the maximum amount of interest. Like, it seems like those are the fundamental rules. So, the community can run around and say, well, we will make our own wool and our own clothing, or we will make, but every little community can't make everything. So somehow that's what I wrestle with, is how does one decide in the community to make what you can, but to trade with others for what you can't, and and build a strong community without a lot of interest. Not being a debt society. There's a new book you probably heard. What's it called? Debt: The First 5,000 Years. So those are the sort of fundamentals, it seems, that one would have to get straight before proceeding randomly about what you make and what you import.
Try to answer that real quickly because I do need to go, and Susan can pick this up. But basically, the rules of the system can be determined by a group of people. They are already being determined by Wall Street bankers. It's the rules associated with the loan portfolio. They decide who gets what kind of loans and for what. They don't fund sustainable businesses. They do fund fossil fuel industry. And so those rules can be made at the local level within a public bank in determining what the loan portfolio, and North Dakota has 25 different loan programs, and all the rules associated with them are determined by a group of people who are local to that area. And so they may value one thing over another, and so exactly what you're talking about, the rules of the system can be determined locally, and it's usually done by loan officers who understand the loan portfolio and how it needs to be modified over time. And so that's the heart of a public bank, is the loan portfolio, because it actually determines who gets funded, and what kind of businesses get funded. And those are really important conversations that we don't have in our communities right now because we've kind of outsourced all of that to the Wall Street banks, who used to be on our side, but they're not anymore. So,
Mark, I want to thank you so much. I know you need to get on to your interview, and Susan is still on the call. So Susan, I'll have you potentially give us more information on the conference, and also Christine has a question. So Mark, whenever you have to go,
Caroline, I just want to thank you for giving us this opportunity, and thank to everyone on the call. I'd love to be in communication, so freely give out my email address. If anybody needs to reach out directly, it's Marc, M-A-R-C, at publicbankinginstitute.org. Okay, thanks everyone. Bye.
Thank you, Mark. And Susan, to you, and I know we're going to wrap up soon, and I see that Christine has a question as well. So Susan?
I did just want to say one thing about, I forget who asked about how investing locally and people who are ready to invest and don't quite know what to do with their money, they could buy bonds in a bank and start a local bank. That would be one very useful thing to do with their money.
And there is a question too from Christine. Do you want to?
Yep.
Let's hear that, and Christine, go ahead.
Hi, can you hear me?
Yes.
Yes.
Okay. I have, 25 years ago, the experience of starting a securities broker-dealer with professionals like attorneys and CPAs, and I'm wondering about their skills to be translated into this concept. But the other thing that gives me some other comparison here, which I don't know enough about, is a state bank. In other words, Mark has talked about rules and regs coming from Wall Street. While at the time I was in financial services, we still had Glass-Steagall in effect. And naturally, the broker-dealer wanted no part of a bank having investment possibilities. So what we're talking about here is looking like a mutual fund in a bank, okay, which is an investment instrument. So again, I need to have some comparison. I didn't get the first part of the call as to what are the skills to begin this, which is essentially some kind of a corporate structure, a public corporate structure.
Yeah, go ahead, Susan, and then I will also put all the people who signed up for the call in touch with Mark to further the discussion as well. So Susan, anything for Christine?
I don't know how brokerage firms are set up, so I may not be able to make the comparison. The model that we're using for a public bank is the Bank of North Dakota, which was started in 1919 when North Dakota was a progressive state, not like now, where it's a very red state. It has been amazingly successful. It didn't suffer at all from the 2008 depression, as I call it. North Dakota has the lowest unemployment rate in the country, the lowest foreclosure rate, the lowest bank failure rate, and the lowest credit card default rate. So things are financially very good there, and we attribute that to the public bank, which is able to invest judiciously and keep the cyclical variations that are killing the rest of us from happening. The people who run the bank are bankers. They're also civil servants. They're not taking home $1 million a minute or whatever Wall Street people are getting at this point. Their salaries, I think the highest salary there is $300,000 for the president of the bank. I can't compare it to a brokerage firm. I don't know enough about how they work.
Can you compare it to a state bank?
Well, it is a state bank. It is the only state bank in this country. Many other countries have state banks, but
I'm in Michigan. I have a state bank. I don't really know how that structure, it's structured differently.
It's not run by the state. It may be called a state bank, but it has to be a private bank because the only one in the country is North Dakota.
Well, this is all very interesting. Where's the best place? Just go to the website and get this research?
Our website is publicbankinginstitute.org.
Okay.
And it's a huge website. I mean, there's all kinds of information there.
And growing.
And the best
every
single
day.
book, if you're really interested in the origin of money and how it all works, is Ellen Brown's book, The Web of Debt. And she's coming out with a new book any minute now. We're sort of sitting with bated breath waiting for it to be published. But start with The Web of
title?
Debt. Web of Debt.
Yeah.
Ellen Brown.
Yeah. The thing that Mark alluded to that I want to reemphasize is that, yes, the U.S. Treasury does not print money. Our money comes from the Federal Reserve, which is owned by 13 families.
Okay.
My local bank clerk didn't even know that.
Well, they named it very carefully. I just read that they were going to call it the Third Bank of the United States, but the first and second banks had gotten a bad reputation during colonial times, so they decided to change the name and make it disguise the fact that it's actually a private organization owned and run by the banks. So they decided to call it the Federal Reserve, but it's not federal. It's totally private. And they're in a very complicated relationship with our government, with the federal government, but our money is created by private organizations, and it should be a governmental function. We think of money should be thought of as a resource, a public resource, like air and water and the other things that we take for granted, and it should be created for the benefit of the public by public entities.
Money is energy. I am
energy.
Yes, someone who is in a vast healing community, and we feel that what you are talking about, right, is a big negative energy, and that does need to be addressed. I just was so amazed today to see how what I know is what the future needs to be is really got a foothold already. I mean, it's like I'm looking at the future today, and I'm so excited. I really thank you for putting this out.
That's exactly the way I felt when I first heard Ellen Brown speak. This is the most radical idea that I've ever been exposed to in a life of radical activism, and I'm struggling because it's been a very steep uphill curve for me. I was a teacher and a principal and a college teacher all my life, and have been phobic about money all my life, but in the end, when you track back any problem, it comes down to how to pay for it and where the money comes from, and that's totally in control of a very, very few, whatever Mark said, 0.0001% of us, and it needs to be a public resource.